So, this class is continuation of previous class. In the previous class, then we completed preparation of cash account. Then, as per general entries, there is required to preparation of 6 ledgers. One cash account, second capital account, purchase account, like that. 6 ledger accounts there is need to complete it. Then the first ledger account then completed in the previous class, cash account. Then after completion of any account, we remember the important point is how much amount is carried down and brought down. That should be concentrated. In the cash account, the grand total, after find out grand total, then we trace out the difference. That is by balance carried down 1,55,000, to balance brought down 1,55,000. We concentrated after completion of each and every account how much amount of brought down amount. Then how much amount is 1,55,000 carried down and brought down. Then we noted that the brought down amount is debit or credit. Then in this cash account, balance carried down credit, brought down is debit. That's why we concentrated and we then we mentioned the point like 1,55,000 is a brought down amount. That brought down is placed at debit side. That's why that is then remember that the cash account, the complete account is cash account. Complete account is cash account. The cash account is brought down amount is 1,55,000. So first account completed. First account is cash account. Okay. Then brought down amount is 1,55,000 at debit side. That is most important. First account is completed. The answer of the first account is then brought down which side? Debit side. That is the most important thing. Then second account. Then now prepared. The second account is capital account. So as per norms of the journal entries, then now prepared capital account. Headings as usual. DRCR is compulsory. A debit side date, particulars, JF number, amount rupees. Amount rupees. Second credit side date, particulars, JF number, amount rupees, like that. Each and every account, there is no change of these headings. Then the second account heading is capital account. Then we put in the second number which account, the name is capital account. So the rules are same regarding ledger posting. You know, already discussed in previous class. Then how to posted these journal entries into the ledger. That's why same rules and regulations now we follow. Then the first entry. Then first of all we checked each and every entry. Then which entry is contains capital account. Checked each and every entry for the purpose of which entry is contains capital account. Then first entry contain capital account. The journal entry is cash account at to capital account. Now we prepare capital account. Then now concentrate capital account. Then capital account is credited. If capital account is credit, Then our capital account, now I prepared capital account credit, then we should enter this entry into the credit side. If capital account is debit, enter this entry into the debit side. So in this general entry, capital account is credited, then this entry is entered into credit side. So capital is credit, that's why entered into credit side. Then we write opposite concept. What is opposite concept? Cash account. So capital is credit, that's why we entered credit side with by cash account. By cash account, amount is 1 lakh, date is 1/1/22. Next, second entry. In the second entry, there is no concept of capital. Third entry, fourth entry, fifth entry, like that. There is no capital account in another entries. That's why balance of the capital account. So ledger posting is completed. Because of there is only one entry have the concept of capital. That's why that is entered into the capital account. There is no another entries have the concept of capital account. That's why closed that account or balanced that account. So how to balance it? The rules and regulations are same. First of all, we added both sides. Both sides equally totaled, the first step, and we added debit and credit. Then now debit is 0, credit total is 1 lakh. After that, highest amount is entered both sides. Highest amount is 1 lakh. This is entered both sides. Debit 1 lakh and credit 1 lakh. Then immediately we trace out difference at lowest side. Then debit is then least amount is 0. So that's why this is 0. The difference is put into 0 and 1 lakh. The difference is put between 0 and 1 lakh. That is 1 lakh minus 0 equal to 1 lakh. So that's why 1 lakh is treated as a carried down balance. So to balance carried down, immediately carried down amount is brought down opposite side. So by credit side, by balance brought down, that amount is 1 lakh. So the capital account is completed. Then after completed capital account, then remember the important point is that then how much amount is there brought down, then which side is placed. There is 2 points you should remember. After completion of each and every ledger account, how much amount is there as brought down, the brought down amount is which side is placed. Which side is placed? The brought down amount is credit side is placed. So that's why that should be noted. Then now completed second account is capital account. That should be placed at credit side. Then brought down is brought down. This amount is placed at there. How much amount? 1 lakh. That should be placed at credit side. Next account, third account is purchase account. Then third account is purchase account. Same headings. Third account, purchase account. Headings are same. First వచ్చి debit, particulars, JF number, amount rupees, date, particulars, JF number, amount rupees, like that. Same headings. Then now we start a purchase account. First of all, in first entry, there is no purchase concept. Second entry, purchase concept is there. You should then it placed at debit side. Placed at debit. That's why this entry is entered into the debit side. Purchase is debit, entered into debit, and write cash account. So, to cash account, amount is 40,000. Date 4/1/22. Next, third entry there is no purchase concept. Fourth entry purchase concept is there. The entry is like that: purchase account data to Akhil account. Purchase is debit, that's why debited, then entered into debit side of that account, but write to Akhil account. So, to Akhil account 25,000. To Akhil account 25,000. Then date is 10th date, 10/1/22. Next entry, there is no purchases, no purchases. That's why ledger posting is completed related to the purchase account. Then after that, balance that account. Then balanced account is first of all we totaled both sides. So debit is 65,000. Same amount is posted credit side. So there is no amount is there because of 0 is there. The difference the difference between 0 and 65,000 is 65,000. The 65,000 we should be treated as by balance carried down. Then immediately that amount should be posted into to balance brought down. Then we are given date for brought down, this month end date 31/1/22. For brought down, immediately next date 1/2/22. For capital account also we are given for carried down month end date 31/1/22. Next month first date 1/2/22, like that. After completion of this account, carried down 65,000, brought down is 65,000. We concentrate. Then how much brought down? 65,000. That should be placed at debit. That should be noted that. Then third account we completed. Which account is purchase account? Brought down purchases. That amount is 65,000. It is placed at debit. Side. Then fourth account is sales account. Then immediately we prepare sales account. So headings are same. Headings are same. 1, 2, 3, 4. 1, 2, 3, 4. Then the title of the account is sales. That is the fourth number account, sales account. So first of all, first entry there is no sales, second entry no sales, third entry sales is given. Then sales concept is credit. That's why we entered into credit side. Then write opposite one. What is opposite concept? Cash account is the opposite. So sales is placed at credit. That's why we entered this entry into the credit side. But write cash account. So by cash account 70,000. By cash account 70,000. Then date is 7th date 7/1/22. This entry is completed. And next entry, there is no sales. Next entry, sales is there. Bonu and co account data to sales account. Sales is placed at credit. That's why credit side by Bonu and co account. Credit side, then we write by Bonu and co account. Bonu and co account. The amount is 50,000. Date 15/1/22. Next entry, there is no sales, and the entry no sales. That's why ledger posting is completed related to the sales account. That's why another step is balanced that account. You know, the rules and regulations is for balanced the same as previous account. First of all, total is 70 plus 50,000 is 1,20,000. Same debit side, 1,20,000. The difference between 0 and 1,20,000 is difference is 1,20,000. This should be treated as to balance carried down. By balance brought down. Amount is 1,20,000. Then carried down, we are given the date 31/1/22 or brought down 1/2/22. So fourth account is completed, and we noted that brought down is credit side, amount is 1,20,000. So fourth account completed. The title of the account is sales account. Brought down amount is 1,20,000. Then it is placed at credit side, CR. Next, 4 accounts are completed. Then we draft to fifth account. Then fifth account. Then fifth account is Akil account. So Akil account, date, particulars, JF number, amount rupees, date, particulars, JF number, amount rupees. So approach is same. The title is then account title is Akil account. This is a fifth number account. Then Akil account, there is no Akil account in first entry, second entry, third entry, fourth entry is there Akil account. Akil account is placed at credit. Then we are entered this entry into the credit side. So Akil account is credit. This entry is entered into credit side, but right by opposite concept, purchase. So that's why by purchase account 25,000. By purchases account 25,000. Then the date is 10/1/22. Next entry, there is no Akil account. Then Next entry, Akil account is there. Akil account data to cash account. Akil account is placed at debit. Then we entered into debit side as written as to cash account. So Akil account is debit. Then entered into debit side as then write as to cash account, opposite concept. Amount is 25,000. Date 25/1/22. Next, this one is entered. Next entry, there is no Akil account. That's why the ledger posting of Akil account is completed. After that, balance this account. Then in this account, at the time of balance this account, there is equal amounts are there. Debit is 25,000 and credit is 25,000. There is no difference. If any difference is there, there is a need to quoted, carried down and brought down. If any difference is there, there is a need to quoted, carried down and brought down. But in this account, there is no difference. Then both sides are tallied. That's why then debit is 25,000 and credit is 25,000. The account is closed. Okay. Then you observe there is no brought down amount is there in this account. If any brought down amount is there, then we quoted that then brought down. Then fifth account then prepared Akil account, but there is no brought down. There is no brought down is there. Next, sixth account and last and final account, Bonu and Co account. Bonu and Co account. Then headings are same, date, particulars, JF number, amount rupees, date, particulars, JF number, amount rupees, same. So then the Bono account is the number is sixth one. In the first entry there is no Bono account, second entry no Bono, third entry no Bono. At the same, then 15th date of entry is Bono account data to sales account. Then Bono account is placed at debit. Then we should be entered into debit side. Then Bono account is debit. Then we entered into debit side, but write to sales account. So Bono is debit side to sales account. The amount is 50,000. Date is 15/1/22. Next entry there is no Bono, but last entry Bono account is there. Bono account is credit, placed at credit. That's why we entered into credit side. Then Bono account is placed at credit. This entry is entered into credit side as by cash account. By cash account, the amount is 50,000. Date 28/1/22. There is no entries are there regarding Bono account. Then ledger posting is completed. After that, this is totaled. Then debit is 50,000. At the same, credit is 50,000. There is no scope for difference amount. Debit and credit is equal amounts are there. There is no scope for difference at any side. If any difference is there, that should be quoted that carried down and brought down. But in this account, the same way, same as Akil account, there is no difference is there. That's why this account is tallied. There is no need to return carried down and brought down because of there is no difference is there. Then sixth account is completed. The name is then Banu and co account. Then brought down. There is no brought down. So after that, then we should prepare trial balance on the basis of these ledger balances. On the basis of these ledger balances, then now we prepared trial balance. Then how to prepare trial balance? The pro forma regarding trial balance is pro forma regarding trial balance like that. Same. The pro forma seems to be then general entries, but headings are changed. Trial balance. For the month ended. For the month ended 31st January 2022. Headings are serial number, name of the account, debit, rupees, credit, rupees, like that. Then at the time of preparation of trial balance, we concentrate the preparation of ledgers, then previous ledger balances only. Those ledger balances now we identified only brought down amounts. Then first account is completed, cash account. So serial number 1, the account is cash. So brought down is 1,55,000. Which side? Debit side. Then this should be entered into debited 1,55,000. Second completed account is capital account. Then second one, the title of the account is capital. Brought down 1 lakh. Which side? Credit side. Now we entered brought down is credit side in that account, and we entered at same side. This is credit, we credit. This is debit, we entered into debit. Then capital account. The account title is capital. Brought down 1 lakh, but credit side. So now it is created 1 lakh. After third one, third account is purchases. We completed ledger account. The third one is purchases. Brought down is 65,000. Which side? Debit side. Then this is debit, and we entered in the trial balance debit side, and the amount is 65,000. Next, fourth one. Fourth one is sales. Sales 1,20,000. Brought down which side? Credit side. So sales brought down is credit, and we entered the same side like credit 1,20,000. And Akil account is there. Then fifth one is Akil account. There is no need to enter. If you are like to enter, then just you write Akil. There is no brought down amount is there. Blanks, then we put blanks. There is no need to write, but you are willing to write, then you write and put into blanks. At the same time, sixth account is Banu and Co. Banu and Co, there is no brought down amount, then we should be blank. So once again, I repeated, there is no need to then write the nil amounts accounts. But you are willing to write, then you write and put into blanks. So that's why then trial balance is then now tallied, totaled. So 1,55,000 plus 65,000. Then 1,60,000, 2,20,000. So the total is 2,20,000. And the credit side 1 lakh plus 1,20,000. The total is 2,20,000. So that's why the trial balance is completed. It is tallied. So as total is 2,20,000 and 2,20,000. So as this way, trial balance total is agreed. Agree means tallied. If this amount is not tallied, there is errors are committed at the time of preparation of journal entries or at the time of then posting these entries into the ledger or at the time of balancing. So once again I repeated, if trial balance is not agreed, it is not tallied. If any error or any mistakes are committed at the time of preparation of ledgers or journal entry, that should be identified. Then now the problem which is discussed by me, it is tallied the trial balance. Then we identified that there is no mistakes are committed into journal entries or preparation of ledgers. So once again the approach is now we completed then business transactions, then we taken as business transactions and prepare journal entries. After that prepare ledger, and after ledger prepare trial balance. Now we completed. Then you know about business transaction and you knows journal entry and you knows how to preparation of ledger and balance and how to preparation of trial balance. No, journal entries, ledger accounts, and you prepare trial balance. So banks are prepared trial balance daily. Day to day preparation of trial balance is day to day we are trace out the arithmetical errors into our accounting procedure. So thank you everybody. This is the procedure for then business transaction, journal entries, how to preparation of ledgers and how to preparation of trial balance. Thank you everybody. Then we will meet next video then about then BRS or subsidiary books. Thank you everybody.